Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Hope everybody had a fantastic Thanksgiving. Guys, before we start this video, Lee's going to hate me. I have to show you a short video that I sent to Lee, wanting to get a reaction from him. I live in Florida, as many of you know. It's the shark attack capital of the world. So a lot of Floridians like myself are kind of armchair experts on sharks, especially bull sharks around this area. But Lee lives in Wales, like no sharks around there. So I wanted to send him this video and see what he would say. Lee, go ahead and play that video.
How do I react when two tiger sharks are approaching me at the same time? There's actually a trick in this video that I'm going to explain to you guys when I break it down in slow motion. What I will do is actually take that shark that is closest towards me, and while I'm redirecting it, I will guide it towards the other shark approaching. That way I can actually use the force of the other tiger to block out that second shark. You can see me backing up out of frame here because I know as they collide there will be a bit of tension between the sharks. But this is a trick that I will use when I can if I don't want to deter both sharks at the same time.
So I sent this to Lee, and what do you think Lee said? Because I was expecting like a normal human being response, like, wow, that girl's crazy. That's so dangerous. I would never do something like that. Lee messaged me back and said, wow, those two sharks almost bumped into each other. And I said to him, Lee, that's like the response I would get from my 11-year-old niece, worried about the sharks. Like, not how dangerous is that? You know, you're missing the obvious thing. And now you guys know, as Lee is my editor, why the content on this channel is so subpar, because he doesn't see the obvious issues that happen. It would be like there's a car accident, a truck runs a red light, hits another car, side swipes it, it flips over in the air, lands on a school bus. I send Lee the video and he says, wow, that truck almost ran over that turtle in the road. like the least important thing you could possibly point out. Absolutely ridiculously. So sorry, but the trolling will continue. Guys, this video is going to trigger a bunch of these soy boy, low T beta males that comment sometimes on these types of videos. This video, how it ends, is about the end of the cycle. Not right now, because I already know there's going to be some frantic young guy typing away on the keyboard saying, oh, your videos are horrible. The market just made a new all-time high. This video aged bad. LOL, clown emoji, clown emoji. This is the Wild West internet, right? But this video is about how the cycle ends. And I want to show you a pattern that's played out over and over again with these types of cycles, what my targets are, because we're wrapping up 2024 here, going into 2025. And just keep in mind, when we talk about when would the end be, when would the bottom be, we still haven't got to my top target on the S&P, which again is 6,092 to 6,136. Those numbers specifically on S&P ES futures, okay? That's what I'm looking at. But from top to bottom, if you look at .com, it took 31 months. If you look at the GFC, it took 17 months. The average of those two is 22 months. You're almost looking at 2 full years if you just average those two together. So this is a bottom prediction, a target prediction. I like to do these because in Q1, actually, before I cue that up, Lee, throw up that Tom Lee thumbnail. So Tom Lee's been all over the media lately. He is the best indicator for an incoming market top I mean, way better than Jim Cramer. So if you can see there in the caption, he says, nothing to worry about for the rally for the next 12 months. Remember, Tom Lee, soft landing, no recession. Tom Lee, 2030, S&P 15,000. No recession, no wars, no debt crisis, real estate crisis, nothing. S&P 15,000. All the Wall Street guys are falling over each other to come up with really big numbers. And as you guys know, I think we're getting close to the top. I mean, we're within 100 points right now of where I think the top's going to be, some chopping around there, and then the descent. But Tom Lee also was on a podcast last week, and he was asked specifically about Bitcoin. And this was, I guess, Wednesday, right before Thanksgiving. And he said, by Thanksgiving 2025, Bitcoin would be 250K. Now, I love this because if you've been watching this channel a long time, you know that in Q4, the last 3 months of 2021, I gave out my Bitcoin target. This was when Bitcoin was trading 60 to 65K. I said Bitcoin's going to go to 10.5. Tom Lee gave out his Bitcoin target, 250K. What did Bitcoin do in 2022? It went to 15.5. Who got closer? Who traded that? Who shared the trade on YouTube for that and on the Discord? Guys, so Tom Lee has 250K yet again a year from now. I think Bitcoin's getting close to its top. I'm going to show you the targets, but I wanted to share this with you because like Ed Yardeni has 8,000 on the S&P for next year. Everything is always priced to perfection when you're looking at the markets and Wall Street wants to give you a sales pitch on why you need to be in the marketplace. It's always going to be bullish, okay? Every single time. What they're leaving out is the fact that we are trading in the most overvalued market in S&P history versus GDP. And I think after today's close, we're going to top 2021 on the Schiller PE for the second most overvalued market in history. As a matter of fact, if you look at the whole market history going back in the 1800s, the market has only traded at this valuation spike 1.1% of the time. Anybody want to guess what happens after it trades at this valuation level? Warren Buffett knows because, again, we've been talking about him a lot the last few weeks. That's why he's sitting on $375 billion in cash. He's not worried about the last 100, 200 points in the S&P. He's been out of the market for several hundred S&P points. I mean, the vast majority of his cash has. So understand this. This is also the most concentrated market in U.S. history, meaning the gains are concentrated in the fewest number of stocks. Very, very top heavy. We have the next non-farm job payroll report coming out December 6th. And those estimates on the street go from 170 from Andrew Hollenhorst at Citi, who's obviously looking at a recession scenario, and he's always the lowest. And then it goes up to 270. So big range, right? Now, remember, my thesis is with Trump coming in at some soon to be determined time, they're going to let loose with the real job numbers. Internal surveys in the Fed, there's 700 PhD economists. The internal survey of the Fed is 80+% of the people that work at the Fed identify as Democrat, right? 80+%. It's the same pretty much all through government. It's basically a Pareto distribution. There is no love lost. They don't intend to do Trump any favors at all. We know the numbers have been cooked on the non-farm payrolls because we already know since that big revision of 818,000, they've already dropped another 130,000, almost 1 million jobs that the government said existed under Biden and Harris never existed. Remember, this was part of the thesis, part of the preamble to everybody on Wall Street coming out telling you what a strong economy we have. And it turns out half the jobs don't even exist. And so at some point, you're going to see this reflected in the numbers. I don't know if it'll be December 6th because Biden's still president. Trump doesn't take the office till January 20th. So it could be in January, it could be a shocker this December 6th, or it could be in February, but I think you're going to see the real numbers start to come out. Remember, our last jobs report, we only had 12,000 jobs, and we would have been negative had the government not hired another 43,000 government employees. We're at an all-time record high for hiring government employees. Meanwhile, private payrolls have been going down. This is a paper tiger economy. Those of you that watch this channel understand that. And as you also understand, we haven't reached the targets yet we're supposed to be getting to. So that's where I think the fireworks are going to happen. People are asking me about a Santa Claus rally. Will we have a Santa Claus rally? Well, my targets haven't been reached yet. So I guess if we rally into the late December, then yes, that would be the Santa Claus rally. But what's really fascinating to me is right now we're at the valuation level of where we were in November, December 2021, the exact identical valuation level. I'm going to show you this on the Schiller, 38.54, 38.58, the exact same level. And then the S&P went till January 3rd, and then it topped. But Bitcoin and the NASDAQ both topped in November. Obviously, here we are in December, right? Again, not identical. You're looking for a pattern of behavior here. But if Bitcoin and the NASDAQ are close to topping, specifically Bitcoin, if it just has one little leg left to go or whatnot, guys, I think you're going to see a lot of fireworks Q1. January, February, March of next year. That's where I think the fireworks will kick off. I think you'll see the data come out. I think you'll see the market that's priced for perfection start to sell off. And I think it's going to be a fascinating and fun time to be trading. So if you guys want to be part of a fantastic trading community, then check out our Discord. Guys, go to marketmakers.trade. You can join right through the website. I'll pin it in the YouTube comments, marketmakers.trade. Also, my New Year's resolution this year, I'm going to be more active on X. I've been really idle. We post our videos on X. I answer the comments in the YouTube section. I really want to start replying to people on X. So be sure to follow us on X. I'll pin that in the YouTube comments as well, because I like to be more interactive there, especially going into 2025, because I do like Elon. I like the free speech platform, and it needs to be my backup, because you guys know if you watch this channel, YouTube does not like us very much. So guys, without further ado, Lee, let's start the show. Guys, this is our new website. You can join the Discord directly through the website. You can join the website package, which gets all of our videos, our TA, trade signals. That's all on the website. Look how nice this looks. Took a long time to get it done, but it came out really, really nice. I think you guys will really like it. So check that out, marketmakers.trade. And just a reminder, check out our sponsors if you want to trade these markets, guys. SimpleFX, where you can trade everything, Forex, commodities, cryptos, the markets. If you live outside the US, check out SimpleFX. You get our Market Makers double bonus and Bitunix to trade all the cryptos, guys. Again, Market Makers bonus link there. No VPN, no KYC required on Bitunix. Everybody can trade there. All right, guys. So let's talk about how it ends, right? First of all, we have to make some assumptions. We're at 6,062 on the ES right now, right? Again, my top 6,092 to 6,136. So what we're going to do is get our targets based on the balance line, the giant ABC on all these markets that we're going to look at. Okay, we're going to look at ES, we're going to look at NQ, the NASDAQ, and we're going to look at Bitcoin. Okay, so we're going to look at these three. We're going to pull this from 6,136. We had our Trinity pivot last week. We'll see if that starts to create a turn in the market. Let me go ahead and delete this so you can see us a little bit better. We'll do this. Now let's go ahead and pull this. We're going to pull this from the October low, a fib retracement tool. We're going to bring it up to 6,136. Try to get that exact. It's on the weekly. It's really hard. 6,139. Now let's talk about history. If you guys watch this channel, you probably like market history, something I've studied extensively. What is the average bubble drawdown? What are the rules of a recession? Well, in a bubble, the average drawdown in the S&P is 50%. Now you go to 1929, you fell 80%, right? You took 25 years to recover that. If you go to the Nifty 50 in the early 1970s, you fell 62, 64%. If you look at .com, you fell exactly 50%. You look at the GFC, you fell 57%. We know the average drawdown is 50%. I personally think this market's going to draw down between 50% and 66%. Both of those numbers are Dow retracements. I'll show you this here in the charts. Now, why am I pulling it from the specific point? That's a good question. Let me answer your question. Because to me, and I've already showed you guys this several times, I showed you this on Bitcoin as well. To me, all you have here is a W pattern, okay? So you have a W pattern that formed based off this retracement that started back in July of 23 and then bottomed, right? October 23, and you come up to your target, right? So this is what I'm looking at here. That's where I'm pulling my retracement from. And when I was sitting here looking at this, let's do the drawdown here of where this would go. 61.39, we're going to pull this down to the 1618, guys. Look at the percentage loss here, 53%. Now, what's a recessionary rule? Every single recession, and this is the juncture, by the way, just to save you some time. If you think there's no recession coming, you should still understand every recession indicator has triggered every recession indicator with 100% accuracy, including the infamous SOM rule, which is nothing more than a copycat of an existing 6 basis point rule on unemployment, but whatever. The infamous SOM rule, which of course since 1953, every single time it's triggered through all 12 recessions, you've already been in a recession. We triggered in August, guys. You're already in a recession according to the same SOM rule. If we decline to 2875, couple of notable things here. You're taking out the cycle low, something the market has done every single recessionary cycle. Not one time, not 4 or 5 times, 12 times out of 12. You take out the cycle low. This again, the 50% level. Now I said 66, right? 50% to 66%. Well, let's go down to the 200% move. Look at the 200% move. 66% takes you down to 2105. So you have 2875, which does what? Takes you right back to the pandemic. If you guys already know this, parabolic moves tend to return to their genesis, their origin point, right? You can read that in a lot of different technical manuals, but that's what happens. This 2875 takes you back to the pandemic level. 2105 takes you, is that below the pandemic level? Let's see. It is below the pandemic level. And again, that's your 66% move. That's your Dow retracements, 50%, 66%. Again, the assumption we're going to 6136. This would change slightly if we top just before this, like 6,092, or if we top above it, 6,200, 6,250, whatever. I wanted to give you guys these targets because everybody I see, like David Hunter's out there doing the rounds, that Z-Bird guys out there doing the rounds, all on podcasts talking about their targets, these 80% crash levels and stuff. I'm not saying those levels can't happen. But as you guys know, if you've been watching this channel for 3 years, I try to give you levels based on natural law, based on proportional movements in the marketplace that have a realistic probability of getting hit. Could this go higher? Sure. Could it go deeper on the crash? Of course it could, but I want to give you realistic probabilities based on market history. 50% is the norm, 2875. If it goes deeper, I'm looking at the Dow retracement, 2/3 of the circle, looking at the Dow retracement of 66%, 2105. So let's go ahead and move forward. That is the ES. Again, I would expect this to start crashing in 2025. That's when I think the shit will hit the fan. With the data, with the recession that we're already in, I think it all comes to fruition, and you'll see a lot of that Q1 2025. I would not be surprised if you see it come January, some major fireworks, and I'll show you why in a minute. But let's finish going through these charts. Looking at the NQ. Here's our balance line. We already hit it, the giant ABC, 20,623. You're at 21,212. So even though the NQ may or may not have topped, we don't know yet, but we're going to take this from the top, right? So we're going to take it to the top, I should say. So we're going to use the same point here, October 2023 low, because this really is just a giant W pattern, come up to the 21,340. And let's just look at this. So we know that typically the NASDAQ will fall greater than the S&P. Now in the GFC, it didn't. The S&P fell more, right? Because that wasn't a stock bubble. It was a real estate bubble that took down the stock market. But we do know that the NASDAQ fell 80% in .com when the S&P only went down 50%. So let's just see what Fibonacci tells us based off these measurements. We're going to take this from the top, go to our golden ratio target, our harmonic proportionality. 55% takes you down to 9,690, accomplishes the goals of sweeping the low as it has done every single time for 80 plus years through 12 recessions, and takes you to a new low of 9,690. Now, what's below this at the 200% move? The 200% move, which again would be just another 66, 67%. You can see how closely these markets are tracking together, is 6,939. And that takes you right back to the very lows of the pandemic as well, 6,939. Could this move at a greater magnitude? Does it have to go this deep? Well, again, I expect the lows to be taken out because that's what's happened all through market history. Beyond that, debate it. But I think this is going to happen because it's happened for 80 years plus through 12 recessions, right? And if you don't think we're having a recession, that's fine. You can live in la la land with the unicorns and snow fairies, whatever. You're going to have a recession. You have every single market cycle. The indicators have never been wrong. Timing it, I think it's coming next year. So this is why we're looking at these levels, guys. Now, obviously, NASDAQ goes up higher, makes a new all-time high again. This will change slightly, but just understand these levels. This is NASDAQ futures, 9,690, 6,939, your 50% retracement, your 66% retracement. Those two levels are what I'm looking at. Now, let's look at Bitcoin. This one will be the most contentious because I can already hear the keyboard warriors getting really upset. I'm no stranger to controversy. So let's look at this. Where are we going to pull this fib on Bitcoin? Well, first we got to talk about where is a possible top. And probably not to the surprise of the people that watch this channel, I don't have a 250K target, a 1 million target, a 13 million target on Bitcoin. I trade the markets. I look at realistic levels. Now, again, we know how the fibs have played out here in the marketplace, right? So we know from this large consolidation range, which we nailed the top of, we had this range here. We got right up to target at 98K. This is on Bitstamp, so this isn't my normal trading chart here, but the 2618 is 112,977. I think on the other ones that I'm using, it's 114. So just keep this in mind. It'll vary a couple thousand points here, right? But that would be the next level up, right? That 112 or 114 area, depending what chart you're on, that 114 area is what I'm looking at. Now, what's between that 98K level that we're at and the 114 area that we're at? Well, that's what I want to look at here, right? So we're going to go to this low, the 15.5 low, and go up to that high of the consolidation range there. Pull this down, you get 107.89. Let's call it 108. You get 108, right? So I showed you the other ABC from the pandemic low that we struck, right, on Bitcoin. This would be an ABC, a three-wave move from your cycle low and to your big consolidation breakout range of 108. So 108, 114 is my Bitcoin target for the top, right? That's what I'm targeting for the top. I already know, you don't have to tell me. It's so much lower than everybody else's. I get it. Guess what? My target was way lower than everybody else's after we started to make this top up here, and everybody else had it going the other direction up to 250K. And I was sitting down here at 10.5. Okay. So this is what I'm looking at, guys. And when I pull this, well, that's where we're going to pull our fib from. We're going to go to the bottom of this accumulation range, which on the 3-day chart here is your August 4th, 2024 candle. We're going to just take it from the 108 level. Okay. 108 level. What do we get? Well, let's look at it. From 108, which we are not at yet, we could be topping here. By the way, we took a poll on the Discord of different levels where Bitcoin's going. I was kind of surprised. The number one answer, I think, was the same answer that I had, which was I think what was the range? I don't remember now. I think it was 115 or 114 because that was my 2618. 114 to 125, I think, was the number one answer. And then the second most popular answer was Bitcoin already topped. So that was interesting. And then those ranges go all the way up to 200K or 250K. There's people that answered all those. But let's just take the measurement from here, guys. 108, right? We'll take it from 108, pull this down, Look at that. That is a 87% decline, 13,455. Again, depending on your exchange, but even on my other exchanges, it is 13K. Okay, 13.8, something like that. So 13,455. What does that accomplish? Takes out the cycle low. Again, if Nasdaq and the S&P take out the cycle low, I understand some people think Bitcoin is never going to come back below this range again. It's never going to go below 50K again. It's going to establish a new bottom. I heard that over here. I heard that right here. This is going up. I heard that the whole way down. Let's just look at through history. Is 87% ridiculous to come down to 13,455? Is that ridiculous? Well, what did Bitcoin do back in November 2021 as it fell to 15.5? It dropped 77, 78%. What did Bitcoin do in 2017 to that cycle low? It fell 84%. So no, I don't think 87% is ridiculous at all. And by the way, guys, if this level is too low and we actually do come up to 114 or a higher level, let's just take it from 114, this level will change, right? So this number will change. So 113, let's go to the 114 area right there. 114 in that area. Now we have to pull our fib up to that area as well. Let me grab the fib. Get rid of that. Get this. Pull this up to 114. What does that do to this level? 114.3, right around that level. Well, now they come down to the 1618, that gives you sub 10K Bitcoin, a 91% decline, because again, this is based on the measure of proportionality, okay, natural law. That's 114 Bitcoin 114K Bitcoin coming down to the 1618 would be a 91% decline, taking out the cycle low. I know it's shocking. Go ahead and tell me how ridiculous it is. I totally understand that. I'm not here to convince you of anything. I'm not in the trade to trade this drop right now. I think Bitcoin still has upside. S&P still has upside. I'm simply sharing with you how I believe the market cycle will end. Now, Bitcoin, because it fell so fast, 2021 to 2022, you could see this type of move late next year once again, right? It all depends when Bitcoin tops. But overall, you're not getting anywhere near 250K, in my opinion. You will be going the opposite direction come Thanksgiving 2025, the inverse of the Tom Lee prediction, right? The inverse. So that's what I'm looking at for Bitcoin, those targets, 13.8 being my most realistic target. Now, a couple things I want to show you. Shiller PE. Where are we? Well, this will update at the end of the day. I think it's based on closes. 38.54, 2021, we were at 38.58. 38.58, 38.54. This will be the most expensive, second most expensive market in stock market history, going back to the 1870s in stock market history. And just keep in mind, like I said in that little preamble, this is the exact equivalent evaluation right now where we were in 2021. What happened going into 2022 when Tom Lee said the S&P is a generational buying opportunity in January of 2022 after its small initial pullback? What did the S&P do? It fell 30%. What did the NASDAQ do? It fell 40%. What did Bitcoin do? It fell 77%, okay, at this exact identical valuation. Now, remember, long time ago, I predicted we would take out this level, and I think we're going to based on today's closes. I think this will come up and you'll be above this level. Second most expensive market in stock market history based on the Shiller PE. Showed you guys this before. January fireworks. This is a GFC cycle for rate cuts. By the way, that December that everybody thinks may not get a rate cut now, I think you're getting a rate cut. Why? Because we did in 2007. We got 25 basis points. I think you're getting it again. January, Ben Bernanke called an emergency meeting, 75 basis point cut, and then 8 days later, cut another 50. The next Fed meeting was in March. He did another 75. So between January and March, he cut 200 basis points. This with inflation and everything, by the way, still ticking up. Let me show you some of this stuff. This is really interesting. If you look at the inflation rate, I highlight it here with these lines going back to 2007. 2007, remember the market topped October, right? October 11th. 2007, just like this cycle, September 18th, The Bernanke cut 50 basis points, just like this cycle. What did inflation do? Well, when Bernanke cut, inflation was at 2.8. Inflation then went to 3.5 as he continued to cut. And guess where inflation was in November of 2007? It was at 4.3 as he cut again and then cut again in December. And then when he did that emergency meeting in January, guys, look at how it made inflation jump. So in January, he did the emergency meeting. Inflation ended up going from 4.3 up to 5.6%. So in other words, as Bernanke cut, first cut, next cut, next cut, next cut, big cuts, inflation continued to rise. This is why the Fed will not pause. Powell is aware of this. And by the way, what was the big deflationary move? Look at inflation, how it came all the way down to minus 2.1. Of course, how the Fed measures it, minus 2.1 deflationary bust. This is what's going to happen, Lebowski. Okay, so inflation rises. The Fed doesn't pause because they know the real numbers. They're not sharing them with you. They know the job market is actually weak. The numbers are cooked. The economy, the underpinnings is weak. It is not strong. I predict the Fed will keep cutting. Inflation may keep rising just like it did in 07 into 08. Even that big jump up, 5.6%. It jumped from 2.8 to 5.6 as Bernanke kept cutting, and you still had a financial collapse. Okay, let's move forward. So this is also the government numbers here. Civilian unemployment rate. I want to show you something. So using a 20-week moving average, simple moving average, see how unemployment is curling up. By the way, it's predicted to go to 4.2 this next print. You're at 4.1. Your cycle high so far has been 4.3. Every time you've gotten above the 20 weekly moving average, inflation, unemployment has done nothing but go up. Look at this. So here you are. Here's the what's this? The GFC. You get above the 20 right here around that 4.5%. You get above the 20. What does it keep doing? Unemployment keeps rising. By the way, peak unemployment during the GFC hit 10%, right? That's what that 10 number is. When did that happen? September 2009. The market bottomed in March of 2009. 6 months later, unemployment was still rising. I told you, it's a leading indicator in the sense you have triggers for the unemployment, and it's a lagging indicator with how long it takes to complete. The market had already bottomed. What about .com? You crossed the 20. What did you do? You kept moving up. And unemployment reached 6.3%, a very mild recession. I think where you're going to end up is somewhere around 7-8% unemployment, really splitting the difference between GFC and .com, you'll end up around 8% unemployment, but you're going to be spiking up above the 20. Something else interesting about the 20 weekly. Once you get below it, notice how you don't violate it. You keep going down. You keep going down. What about the soft landing everybody talks about? Because you hear it on these channels. I hear it on these channels. I hear it on Bloomberg every single day. Well, this is like the 1990s, Bob. This is a soft landing. We just kept gaining 20, 25% all the way to 2000. It was fantastic. Well, this is the narrative they're talking about right here in 95. Unemployment dropped in this soft landing. Okay, look at this. Unemployment, let me click the trend line here. Unemployment went from 5.8 to 3.8 during this soft landing. You were below the 20 the whole time. Unemployment went down, not up. When you hit cycle lows, the only way unemployment goes is up. 3.4% was our cycle low. We're currently at 4.1. This is predicted to go to 4.2. I think you're going to be at 4.5 before you know it at some point next year. You're going to see this continue to rise as the economy weakens. And guys, you can keep pulling this back. Again, you cross the 20, same thing. The Volcker recession, right? You get below the 20, same thing. You stay below the 20. It just goes over and over for all the different recessions. You can go back and look at it on your charts, but just be aware of this. Nobody's going to tell you this. It's really simple. It's just a chart. You don't need a daily show of middle-aged men making concerned faces to understand this information, guys. It's really simple information. The market will do what it has always done throughout history. So will a business cycle. So will unemployment. Simple. Very simple. Saved you hours and hours of podcast time. What is the DXY doing? It's sitting right on the trend line of 105. 883. It bounced up today, 106 and a half roughly. Again, it needs to stay above this Wyckoff fractal. If it can stay above, looking at upside targets, you got to flip 107 and a half to come to 109, right? Again, pressure on the markets once it does that. If we look at the VIX, still very low, below 15,250. It's at 14,770. This is VIX futures. So that's where you're at here on VIX futures, 1470. Again, conducive to rallies. And again, you've seen the Fibonacci pitchfork here, the 786, which is what we're going to hit, is going to be right in line with that 6,092 target, which is where I think we're going based on the pattern, the big reversal pattern of the W. We're going to look at that here momentarily. Let's go ahead and move forward. Already looked at that chart. Where is my S&P chart? These got mixed up. Let's move that back. S&P chart. So big, gigantic W pattern that you can see on the weekly time frame. The target is 6,092. Okay, just above that, your ABC target, 6,136. You're at 6,059. Do you have to get there? No, you don't. But again, I think it's conducive, this environment, the bullishness. We did have the lunar cycle today, the new moon. We'll see if this just hovers here. What if it does a fake out? You already got a false break. You took out this high and you start rolling back down. Well, we're going to watch. But until then, guys, I mean, it is a bullish uptrend. Higher lows, higher highs through trend. That's my target. If you guys have been watching this channel, it's been the target for months. Same target, 6,092, 6,136. That's where I think we're going to be looking for topping action up in that range. Let's go ahead and move forward. The NQ, 21,189. Our all-time high still holds of 21,340. Again, look at the weekly. Massive W pattern. What nobody's going to tell you here, again, W within a W. You have a giant W pattern, as I showed you this fractal in our earlier charts. But nobody's going to tell you these are reversal patterns. These are counter trend patterns that when they hit Fibonacci expansion, the Fibonacci ratios, they reverse. Now, how deep they reverse all depends on the market action, on your market narrative. If you think this is an incoming major top, you just think it's a pause, whatever. But right now, the Fibonacci is still holding on this, guys. 20,650 was right with your balance line. Also the 1618. 21,366 was just above you. You're still in this little box, bouncing up and down. The S&P, I believe, just has a little bit more to go before it starts topping. Could the NASDAQ flash a higher high here? Sure, it could. Could also just reverse and start chopping around in here. Again, part of that premise being the NASDAQ top first back in the 2021 cycle. Now, you look at the SPY, just to relate this to you, because I know some of you like ETFs, 609 is your equivalent of the 6136 when it comes to Fibonacci, okay? Because that's the target of the ABC from the pandemic low. It came up with 609. You're at 603. Immediate resistance above you, 605, 609. Watch those levels if you like the SPY, because again, that's the balance line here on the SPY. Moving forward, the Dow, they ran it up during the holiday week. They put a lot of points on the Dow, big moves, and then today they were selling it as they were running up big tech, right? So the Dow came right up to 45,069. Again, watching these pivots here, the lunar pivots, to see if we start forming some type of pivot right here in this range. You're at 44,919 right now. Your high was the previous daily candle, which was 45,121. The Dow's at resistance. Literally every candle body closing below so far, that 45,069. So it's a target area to watch. NQ on the daily. These charts are so out of order. But we have our balance line here. Let me get rid of that. If we look at this again from the W pattern that formed, right? Pulling our fib from 3 to 4, we got up to the 1618, just above it, 21,067. We bounced right off the 1.732 at 21,259. Again, you're at 21,188. See if we can be contained here. Can the NASDAQ be contained as big tech is getting rotated into once again? We shall see. Your high is still holding. We'll see if it holds the week. Looking at the Russell, Tom Lee's big trade, right? He's made a lot of predictions about the Russell. Every single one so far has been absolutely wrong. You would have made a lot of money if you traded against Tom Lee. I've been over those predictions as well. And I'm not trying to troll Tom Lee, but it does irk me when I saw him on the podcast and the guy was just kissing his feet, telling him how he's like the best forecaster that's ever existed in the marketplace. And I'm like, just go back over the last 3 years. His Russell prediction, he went on CNBC, he went on Bloomberg, he did podcasts, he went on multiple shows on CNBC. The Russell's going to rally 40% in the next 8 weeks, 5% gain a week, right? 5 days later, the Russell fell 18%. It didn't even rally 1%. It fell 18%. He just makes these predictions and then people just forget. They just forget because they want to forget. Absolutely incredible to me. But I remember 2441 on the Russell. What's significant about that number? Not a whole lot. 2460 is your all-time high. These are Russell futures, RTY. My target was 2523. Could we get there? I think you got to see the S&P get to that 6136 maybe, unless the Russell gets rotated into once again. But as of right now, you're building a top right there at your all-time high. I do believe this will be a double top, whether it's up there or down here. It's going to be a double top. The domestic companies are extremely sensitive to a recession. On top of that fact, you have these companies, particularly in the Russell, 43% of them are zombie companies that make no money. They literally have no profits, negative returns. There's no way the Russell would keep rallying unless you had the perfect economic environment, which is what Wall Street's trying to sell you. What I'm trying to tell you is watch your key levels of resistance because I believe it's going to form a top and you'll be coming back down to take out that low in a big sell-off. If we look at the DAX, I wanted to show you the DAX because I've been very patient on the DAX. People have been asking, where are my DAX trades? Look at our balance line, the ABC from the pandemic low, 20,160. We're at 19,951. We're almost there. So I'll be paying close attention to the DAX up in this region, completing the balance line because the only other market that's done it so far is the NASDAQ. The S&P hasn't done it yet. The Dow certainly hasn't done it. That's multiple thousands of points away. The DAX is about to do it. If it reacts like the NASDAQ, it's going to throw some wicks up around here, and this could end up forming its topping range. I'll be pulling more fibs on that on the Discord for the members as well, guys. If you are interested in the DAX, key resistance level is coming. This, by the way, as many of you know, being half German economy is at 6.1% unemployment. Do you know what the unemployment was during the pandemic? 6.4%. They're almost back at pandemic levels of unemployment when the whole economy shut down. That's how bad the economy is in Germany. Most of my relatives still live there. I hear these updates all the time. So I'm just telling you, this is proof in the pudding of euphoric markets, right? This is what a market does when it doesn't care about reality. It keeps rallying to yet another new all-time high as your economy is in the toilet. Moving on. That's also the DAX on the daily. Well, that's just a closer view, but there's the same target, 20,160. And let's go to Bitcoin. Bitcoin, you guys have seen the giant ABC from the pandemic low. We struck that target beautifully. That was at 80,804. We held that target for a week, and then we continued to move up to our harmonic expansion up here. I'm sorry, we held that target for, no, that was that right target. We continued to move up to our harmonic expansion to the 2 fib, 200% of the move, 98,742. Again, wave symmetry, average wave being 100%. And that's where you've been stuck. Is that the top, Brendan? That's what people keep asking me. Is that the top? Well, I think based on my fibs here, again, here's our ABC that I just showed you on that video in the beginning, or the chart in the beginning. You have the 107, 290, 108 level, and then you have the 114, 151 at the 2618. I think you're going to come up to one of these two levels for a last splash. And I understand that's not very high up, but that's the two levels I'm watching. The two, as you guys know, if you've been watching the channel, the fibs have been playing out beautifully all year long on Bitcoin, actually going back to October 2023 with our diamond pattern breakout that I shared with you guys. down here. Can't draw a diamond this way, but diamond pattern breakout, right? 131% gain. And so when you look at this and I look at the fibs, can this just be the top? I mean, it could. I just feel like it's not quite done yet. I feel like you're going to get another jag up, kind of like this top. You had that first top right here. What was that? That was 66,969. And then you came up a little bit more to 69. Over here, same thing. You got what could have been the top right around 61.8. And then you came up to what, 64, 65? Yeah, 64,837. I feel like you can get up there. This again, this balance line right here, the 107. I pulled that from, let me get rid of some of these fibs. I pulled that from 2 to 3 to 4, right? It's an ABC, and that takes you up for your impulsive wave up to that 107. So those are the levels to watch, guys. 107, 114. Let's go to the smaller time frame here, the 8-hour. When you look at this, where you've achieved your resistance and how you're still forming, this is still a bullish uptrend, right? Granted, you do have an obvious double top, larger double top right there, right? We had 2 shorts on Bitcoin in these ranges up here on the Discord, as well as on the website. We also had a long on Bitcoin from 61K. Same thing, guys. So now we're up here. You also had a smaller double top right here that formed and broke down. But again, basic TA, low, higher low. As of right now, higher low. What level do you want to hold? You want to hold this fractal right here, 93. And actually more important than that one right now is going to be this fractal, since you established that low, knifing back into that trading range. And that's at 90,852. If you break 90,852, you are breaking this double top, and then you will be descending, right? So we can pull a fib here, get some target levels. You could be seeing 88 to 86K if you break below 90,852. But if you just keep going sideways, you're just building up energy, right? And if you look at this from this perspective, let's just do something like this. Let's take a top here, kind of connect these little tops, and let's go down here. Can we get a nice clean look here? Now we'll do it from this low. We do this low, you got a little bit of a baby triangle right here, right? So you got a little bit of a triangle right here, the tops and the lows. You can see this, right? So you're bouncing off the triangle, you're hitting the top of the triangle. You have your apex right here. Again, this could still go sideways, but just as of right now, you have this little triangle shape. Let's see if it breaks to the upside. You got to clear 98,755. You got to clear that fractal high. Depends on your exchange, but right around that 99 and change level. You got to break up above that, move to your next target, 107, move to your next target, 114, if you can do it, or you're going to start breaking down below. And if you lose 90, watch 88, watch 86, guys. And that is what I have for you today. I don't know if this was a long one or not. Feels like it went kind of long. Kind of had some fun today. It was a good time. All right, guys, I answer your comments and questions as always. Add me on X. Be happy to talk there as well. Hope to see you on our Discord or on the website. Talk to you guys next video.